Hey, what's going on, everybody? It's Mike Watson with Keller Williams Realty here in Palmdale, and I have the monthly market report discussing how 2018 ended for the Antelope Valley real estate market. In this video, I'm not going to go over all of the details, just some of the talking points that I wanted to hit. If you're interested in more detailed information, go ahead and check out the blog in the link below. And as always, if you have any questions, feel free to call, text, email, however you need to get a hold of us. You know how to do it. Alrighty, so without further ado, here we go. In general, the inventory levels, it ended up 52% higher, which means it effectively doubled the number of homes that we had for sale from the beginning of January 2018 through the year end of 2018. That's a massive jump. And more importantly than just how much inventory we built, it was also a big thing to note that at the end of the year, and so on here it says we were only down 9.5% from the previous month. Typically, we see a 25 to 30% drop off in inventory levels at the end of the year, and with last year, we only saw a 9.5% fall off, and that's on top of having grown 52%. That's a really big deal. Fall off would be homes that either expired or canceled. So homes that didn't sell but are no longer available. And so that only dropped by 9.5%. And at the end of the year, we usually drop a quarter to a third of our inventory levels. The number of homes that went into escrow for December was up 9% from 2018 versus 2017. However, it was down 15% from November. That's pretty common. December is usually a slower month than November, not a huge issue there. The number of escrows that closed was down 9.5% year over year, and was up 3% over November. That's the 3% higher than November is an oddity. And the number of homes that sold being down almost 10%, that's a big deal, and that also shows why we're building inventory, because we're closing fewer homes. The average sales price was up 7% over last year. That sounds great, but as the slide says, that's the lowest growth we've seen. So 7% over the year is the lowest number we've seen since 2012. And 2012 was the first year of growth that we had after the previous 5 years all being declining markets. So really with that, it's saying that 2013 through 17 were all more than 7% appreciation in average sales prices. And for the first time, we slid back on the appreciation amount, which is still appreciation, which is good, but it's the slowest appreciation we've seen since 2012. Not a good sign. The listing price versus sales price ratio, it was down 1% year over year, and the 97% is a historical average. I think our historical average is actually 97.5%. So it came back down to just below average. Not a big factor to be worried about. Our days on market only increased 1 day compared to last year. So the average days on market is 1 day longer for 2018 than it was for 2017. Again, that doesn't sound like a big change, but the days on market average is up 12 days during the year from the lowest point that it was. So while we're only 1 day longer than last year, we saw much lower numbers during 2018 than we had seen during 2017. And we also saw much higher numbers, and so the average only ended up being 1 day more. But that was a big trend change in the market last year. And that's it right now for the stats that I wanted to talk about. But if you have any questions, feel free to reach out to us. And then again, in the blog post, there's way more detailed stats with actual figures on the average sales price, the days on market, and all that stuff. All right. I hope you all have a great day, and I'll talk to you soon. Bye.